Welcome back to The Explainer. Today, we are looking at something massive. We aren't just talking about any run-of-the-mill token. We're diving deep into BNB. We're going to explore its wild evolution from a basic exchange token into an absolute titan of the market. And most importantly, we're going to unpack exactly what its investment outlook looks like for 2026. Whether you've been in crypto for years or you're just starting to map out your portfolio, you're going to want to hear this data.
So, let me ask you this. Is a crypto giant that recently lost 50% of its peak value a massive, glaring warning sign, or is it the ultimate buying opportunity? That is the central tension of today's analysis. It's a question that completely divides the market, and by the end of this explainer, you'll have the clear, structured facts you need to truly understand both sides of that equation.
Here is our roadmap for today. We'll start by tracking BNB's journey from a simple token to a crypto juggernaut. Then, we'll look at the crazy peaks and valleys of 2025. After that, we'll impartially weigh the 2026 bull case against the bear case, before finally wrapping up with our verdict on risk versus reward.
Okay, let's dive right into this. Section 1, from token to crypto juggernaut.
You know, BNB actually had surprisingly humble beginnings. Back in July 2017, it launched during an initial coin offering from Binance. And at the time, it was just an ERC20 token built right on the Ethereum network. Its main job? Super simple, giving traders a discount on their trading fees. But as Binance exploded into the world's largest exchange, BNB's ambitions completely skyrocketed. In 2019, it migrated over to its own native Binance chain, becoming the essential gas token. Fast forward to today, and it is literally the lifeblood powering a massive ecosystem of decentralized finance, gaming, and even artificial intelligence.
Moving on to Section 2, 2025, Peaks and Valleys.
$1,376. That is the staggering all-time high BNB smashed into on October 12, 2025. This explosive momentum didn't just happen out of nowhere, right? It was driven by this perfect storm of post-Bitcoin halving euphoria, a massive surge in on-chain activity, and the expanding utility of DeFi. BNB basically shattered every previous resistance level to reach this peak.
But as we all know, what goes up in crypto can come down hard. It's really a tale of two totally different investor experiences. On one hand, you have the early 2025 accumulators. They bought in during the quiet consolidation phase and saw just parabolic gains. We're talking ROIs well over 100% in a matter of months. But on the other side, we have the late 2025 FOMO buyers. As the market got dangerously overheated, a lot of people gave into that classic fear of missing out right at the absolute top. And unfortunately, as the token cooled off, those late buyers were left holding some pretty significant paper losses.
And that brings us right to our mid-2026 reality check. Things have definitely cooled considerably. BNB has settled into a tight trading range, floating right between $650 and $660. Yes, that is a massive 50% retracement from its 2025 peak. But, and this is a really crucial point, it is still maintaining incredibly strong macro support levels. It hasn't collapsed, it's simply recalibrated.
All right, Section 3, the 2026 outlook, the bull case. Let's look at the upside.
One of the absolute strongest fundamental arguments for the bulls is BNB's tokenomics, specifically a feature called the auto burn. So what is this? It's a built-in mechanism that permanently destroys BNB tokens every single quarter. The ultimate goal here is to literally cut the total supply in half, dropping it from 200 million all the way down to just 100 million tokens. It's basic supply and demand. By constantly reducing the circulating supply while demand either stays the same or grows, it creates this continuous deflationary pressure that theoretically acts as a major catalyst to boost the price over time.
And beyond just the tokenomics, there's the sheer massive utility of the thing. Every single transaction, every smart contract execution, every DeFi swap on the BNB chain, they all require BNB to pay for gas fees. But it's going way beyond just simple trades now. They're pushing heavily into massive tech sectors. Think real-world asset or RWA tokenization and even AI-focused blockchain infrastructure. BNB is really positioning itself as the foundational layer for some huge emerging industries.
Now let's talk about the external tailwinds, because this makes the bull case even stronger. First up, you have the Binance backing. Look, despite whatever global regulatory hurdles they face, Binance is still the dominant global player in crypto trading, period. Its success acts like this massive funnel, constantly pouring new users and super high liquidity directly into the BNB ecosystem.
Secondly, we've got ETF speculation. Institutional money is already flowing into Bitcoin and Ethereum ETFs, so analysts are speculating that large-cap, high-utility tokens like BNB might just be next in line. And if that happens, we're talking massive amounts of fresh, traditional capital flooding straight into the asset.
But to be perfectly objective, we have to flip the coin. Section 4, the 2026 outlook, the bear case.
This brings us to a really critical question. What are the hidden dangers? Because despite the awesome deflationary tokenomics and all that utility, there are some very stark realities and real risks involved in holding BNB today. Let's break them down fact by fact.
We're looking at 4 primary headwinds threatening BNB's growth. First and foremost, regulatory scrutiny. BNB's biggest strength, its deep tie to Binance, is naturally also its biggest vulnerability. Any sudden legal challenges, massive global fines, or operational bans targeting the exchange can immediately and severely drag down BNB's price. Second, centralization concerns. Unlike Bitcoin or Ethereum, which are fiercely proud of their wide decentralization, the BNB chain relies on a much smaller, more centralized group of validators that are heavily influenced by Binance. If the broader market suddenly decides pure decentralization is the absolute top priority, BNB could easily lose favor. Third is fierce competition. The Layer 1 blockchain wars are just brutal right now. BNB is fighting tooth and nail against Ethereum, Solana, and these fast-rising Layer 2 networks for developers, active users, and total value locked. If the developers migrate elsewhere, demand for BNB simply plummets. And finally, macroeconomic sensitivity. Climbing back to those all-time highs requires global financial liquidity. If central banks decide to tighten monetary policy, speculative assets like BNB are almost always the very first to take the hit.
Which brings us to our last segment, Section 5, the final verdict, risk versus reward.
Let's quickly summarize this balanced scorecard from our source analysis. On the upside, you've got a highly utilized asset with continuous deflationary pressure, sitting right now at a 50% discount from its 2025 peak. For a lot of people, that is a wildly compelling entry point if they believe in the long-term dominance of the BNB chain. But on the downside, it is extremely vulnerable to sudden regulatory pressures and ongoing centralization risks. It's a coin that demands strict vigilance from anyone holding it.
And that brings us to the ultimate takeaway from today's explainer. BNB has grown up. It is a calculated, medium to high risk blue chip asset. Make no mistake, it is absolutely not some get-rich-quick meme coin. But it's also not a guaranteed safe haven like Bitcoin either. Because its fortunes are so uniquely tied to an exchange, any sensible portfolio strategy involving BNB absolutely requires diversification to hedge against those specific, centralized risks. So, I want to leave you with this final, provocative thought to consider as you analyze your own positions. How will you weigh these unique regulatory risks in your own diversification strategy for 2026? It is a crucial question that every informed investor needs to sit down and answer. Thank you so much for joining me on The Explainer today. Keep questioning, keep studying the data, and keep learning. I'll catch you on the next one.
Thank you for watching this video. Please subscribe this channel.